Righty guys, welcome to a new video. It's been about a week since I posted my last video, but in today's one, I'm going to do a trade recap into last week's trades that I took with the Discord. These are all called live. There's winners, there's losers, but ultimately last week was quite a good week. Let's get straight into it. Now, if you're new here, my name is Ruben. I primarily trade myself the Asian session and the London session, but I want to go back to the Thursday. We'll start with that first. And I want to talk through a few trades that I mentioned. One worked, one was a break even. But that's just how it goes, right? So a lot of people, they get into trading, they think that's going to work all the time. It's just not how it goes. And what I wanted to do here today is I wanted to break down why I called this trade, what I was looking for, what were the confirmations, and I guess my data collection supports this. So I'm happy to, discuss these concepts with you here today. Now let's just start off here with where the price was. So with replay mode, price was sitting roughly about here, give or take, right? I think it was roughly about here, somewhere, right? Now, at this point in time, I like to always start off with the 15-minute chart. That's how I build my narrative or build my bias. I'm very simplistic about how I do it. I don't care if there's an algorithm. Who cares? I'm following a repeatable process, and this is how I do it. This is how I build my bias. So I can see the market has been moving up pretty much for a long time on the 15-minute chart. To me, that looks pretty bullish. Now, there's always two scenarios. When the market moves up impulsively, it can either do this, like it's doing here, and then continue, or it can accumulate and then reverse and then continue. Now, I wanted this first scenario to play out. Did it play out? No, but still there was a profitable trade. So you want to try to build your narrative or try to build your model in a way that you can be 50% correct and still make money. You don't have to have the exact perfect, layout as to what happens at price. It's really, really important. So that's just two things to keep in mind. Now, yes, price could have come down here, which it did, or down here and then react, which is fine. But I wanted to see price expand to these low resistance points here, and I wanted to see an expansion higher. Also, what I noticed is that every single time we, try to push down, we just weren't able to push higher. So we tried pushing down, couldn't do it. Tried pushing down, couldn't do it. Tried pushing down, couldn't push lower, So ultimately here, when I see price sweep out this low, that's a reason that price can react. It's a spot where the market can react from, and you combine that with a fair value gap on the 5-minute chart, like this. You can see this fair value gap here is acting as support. But ultimately, my bias or my narrative, it just came from that 15-minute chart. It literally came from that 15-minute chart, and I've observed this so many times, the market doing that, pausing and then continuing. Yes, the market can do this, which it ended up doing, but you've got to start with what the market gives you, and then if it gives you something different, then you just look for the next up. There's no point worrying about what could happen. Worry about what's actually happening in the current market. So we've got this. I like what price is doing here, and I told my community if we invert this or I've impulse through this area, it's a previous area of resistance, that fair value gap, then that will be a long position. Now, what actually happened here, we had to be quite patient. It was quite a scalpy trade, right? It was about a 1-to-1. And it was on the impulse of this next candle. I believe it was on the impulse of this candle as an entry called. And it was simply like a very small scalp. A very small scalp, over 10 handles, something like that. Stop loss originally back here, about a 1-to-1, and then to break even. Now, yeah, ideally I wanted price to sweep this high, but what ended up happening, price ended up moving down again, came very close to that high. We formed SMT, the highs, and then we moved lower. Now, here's the point. If you're still here, at these swing highs, the Nasdaq, and I'll show you guys on the ES chart just so you can see exactly what I mean. The Nasdaq made lower swing highs here. Fair enough. If we go over to the secondary chart over here and we look at ES and just have a look back at the same time period, let's go back. I think it was over here somewhere. Maybe the day before. Let's go back one more day. So if we go back one more day to the session, look, I believe it was here. So notice how on ES, you can see ES has swept the high. So ES has higher highs, the Nasdaq has lower highs. Now, a lot of people are going to say to me, and you're probably curious, well, Ruben, why did you not take a short from here? You had SMT, the highs, we had a short here, why not take a short? And the simple answer is I wasn't looking for shorts. And I think a big thing that a lot of people need to progress through is always wanting to take every single trade that might present. That's not what trading's about. For me, trading's a business. I'm selective about what trades I take. So you might see me talk through or discuss some trades on one given day that they might be very clear to you. You go, yeah, I'll take the same trade. Other days you might be thinking to yourself, well, why did Ruben not take that trade? It has his model, and it comes down to my narrative. My narrative was to look for longs, and so I look for longs. I don't really switch my bias too much unless I really have to. So at this point in time, the SMT did exist, but I was still looking for longs, and therefore I let the market sell off. And that's cool. You have to let the market do its thing. Like, don't be too concerned about it. Let it do its thing. The second trade came very similar, in a very similar fashion, where we're just kind of hovering in this rough area here, as you can see, finding support at that fair value gap. And yes, we are allowed to peek below it because this is on the 1 minute chart. But if you go to the 5 minute chart, you can see how the candle, it literally sweeps the low, rejects, and closes back in. So I really liked it. I wanted to see this high swept out. It didn't happen, so this would have been a break-even trade. Right, so what actually happened here, entry from here, stop below the body. Maybe some people took, profits. It mucked around for so long. Maybe some people took profits up here, but most people took a break even. They got out in the chop, or they got stopped at break even when price pulled back. And that's it. Right, so that day was Thursday. One winner, one break even, we're done. And that's the important point, I think, about Thursday's price action, is that you don't have to take every trade. And you know what happened here? Look what happened with the market. The market sold off. A lot of people are going to look at this and go, oh my gosh, I should have taken a sell, I should have taken a short position. But I want you to try to rephrase. If you're not yet profitable, if you're struggling with the markets, really try to rephrase and refrain from that mindset that you have to trade every single thing that you see. You have to take every single trade that you see in the market, because it's not the case. You don't have to do that. That's not advisable. It's not my strategy. It's not my model. My strategy is not taking every single macro. It's not what it's about. If you do that, you're not trading the system properly. It's about being selective, sticking to a narrative, having confidence. And if the market moves in the opposite direction, it doesn't matter. You were wrong, I was wrong, but ultimately you can still make money, as I've shown there. Cool. That's Thursday. Now go back to Wednesday. Wednesday I think was pretty easy. Wednesday was like winning all round. Pretty easy day. And there was two trades that I called for the community, and they come around these inversion fair value gaps. Now, for the Discord, for the current time being, I will stay on a Zoom call, roughly starting from the London session 1:40 a.m. Now, before that, if I see anything that's good, I'll hop on the Discord, I'll post my analysis. And one of the trades that I called was this one here, right? And I'll show you guys on the screen exactly what it looks like now. So this is the back end into the premium Discord, and you can see this is posted on that day, right? You can see that's the macro. You zoom in. I gave them that I was looking for a power 3. We use inversion fair value gaps to enter from, and then this was the trade that played out. A really nice, easy one-to-one, very easy framework, macro, power 3, inversion. And that's exactly what happened here. So some people took that long and they made money and they were done for the day. Other people hop on specifically for a Zoom calls, which is fair enough. So we have a 1:40 time frame here. We hopped on the call. Now you might say, well, what about the higher time frame? Let's get into it. So if we go back to price action here, let's just go back, for example, to the 15-minute chart. Let's have a look at that. Now, what I could see was this. Price had been generating all of this low resistance. And I know the market is trending down, but after generating that much low resistance for that long of a time period, I'm always looking for longs. It doesn't matter, because probability to me suggests, and based on my data collection, that at some point we have to reverse. And so what I saw was this. I saw price on the 15-minute form this swing low and also form this swing high. That there becomes a dealing range, so I can mark it out like this. Price down here sitting inside the very low portion, so that becomes what people call discount. And then from discount, I'm always looking for longs. So the big way of how I trade is, are we in a fair value gap? Are we in premium or discount? If one of those things is yes, then I'm looking for the long or the short based on that. And then do we have a clear draw on liquidity? Do you have low resistance? Yes, we do. And then I just enter the trade. It doesn't, you don't need to have this algorithmic mindset with trading. It's simple in the essence that you're looking for this, this, and this. If that exists, you take the trade. If it wins, great. If it doesn't, you just journal it and you move on. That's how it is. It's probability, right? Keep that in mind. So I'm looking for longs. We're in discount. We also swept out Asian sell side and PM lows, like down here. So we swept out time-based liquidity, power 3, accumulation, manipulation, distribution. Everything's lining up quite nicely. It's perfect, right? So that's what actually led me to call that initial trade right here, right? That's the Asian sell side sweep and PM sell side. That's easy. That's an easy long, like A+. Then we come into the macro, and I liked at this point how he generated these two highs. That's low resistance. And something you see often, if you're still here, accumulation, manipulation, reaccumulation, distribution. So that's what I was looking for here, and that's exactly what happened. So it was quite easy. We inverted that space. We came very close to our stop loss when price came back down here, but it didn't tick it. And that was a really easy trade. It was either a 1-to-1 or a 1-to-1 and then holding a little bit further. And that was it, right? So once I call a good trade for the community, that's it. I don't want to keep taking trades. My goal and your goal, in my opinion, when you're trading is to make money, take money from the market and then leave. It's not to take, greed, or fear. It's to take money. Once you've made money, leave the market, be satisfied, and then move on. So that there was Wednesday, I believe. That was Wednesday. That was an easy day. So green on the Thursday, winner, break even. Green on this day, just winning. And if we go back on to Tuesday, I believe Tuesday there was a loss. Yeah, cool. All right, so back on Tuesday, let's have a look now at the London session. And again, if you guys have any questions, let me know. I kind of want to transition this channel to doing trade recaps, trade reviews, things of that nature. I want it to be realistic. I want to transition this channel into not only education, but going through trades, walking through different bits and pieces, because I feel like a lot of people don't appreciate that enough. And I understand from a beginner's mindset that you really want to have that, that 80%, that 90% win rate strategy, but you don't need that to be profitable. To put it in perspective, the last 2-3 weeks of the Discord across Asian London session, the average win rate is 63.7%. For London session, it's 57%. For Asian, it's about 72, right? And guess what? It's profitable for both. So stop trying to think that you need this really crazy high win rate to be profitable. It's really not the case. A lot of gurus tell you that. A lot of these gurus tell you need to crack the algorithm. You need to use this, need to use that. You can use many things to trade profitably, not even just my stuff. Other people's stuff too, doesn't matter. You pick something, you stick to it, you collect data on it, and then you'll build confidence. Let's move on. So on this given day, let's go back to the 15-minute chart. This is an interesting one. I had the right narrative, just a little bit too early, which happens, that's fine. Now, we come down here, and over here is a external swing low. So if you have a look here, we come down, we sweep that low. Now, I got caught out, I believe, in this section here. So if we go back onto the 1-minute chart, I'll go 5-minute first. I like to use ranges, right? So we swept out that swing low, we formed a low and a high, that's a range, a dealing range. And essentially there, again, I'll mark out my Fibonacci. Let me fix this up. So I'll mark out that Fibonacci, and when we're sitting in OT, I'm looking for long, simple as that. It's just a protocol I use. It works more often than it doesn't. You take losses, it is what it is, right? So I see price doing this, we're in a macro, we're about to approach the macro. I like this inversion fair value gap. I like the one that forms at around here. So I talk through a long position with the Discord roughly from here, and we get stopped out, right? Plain and simple, we get stopped out, but it doesn't mean that I give up hope. I just let it do its thing. Like, we have all this low resistance. It's just very clear to me that this wants to be tagged. So to me, it doesn't matter. You take a loss, move on. It's a part of the process. So we remove this, and then we look at this swing low, which is the Asian sell side. We come down, we sweep that out, boom. We have a nice little instant reaction, and this is a pyramid position. So the first entry came when we created this, which is called a change in the state of delivery. So the first entry comes there. The second came when we inverted this space right there. And this one was a macro-based trade with a pyramid outside of the macro, completely fine. Average entry price, probably about here, the average entry. Stop was there. Easy one-to-ones, runners if you wanted it, but that's fine. That made money. That made up for the loss. And some people I know held a bit longer, which is fine. And they held, like up here. Right, and that's it. Right, so this is kind of the system that I trade. It's not always one-to-ones. It just depends on what the market's going to give me. And obviously, eventually, we did end up sweeping those highs. So that's the terminus, that full draw. You're not always going to get it correct. This week, for the London session, what's that? We had one loss. So overall, I believe there was 2 trades on this day, 1 trade the next day, or 2 trades the next day. So 6 trades in total, and literally 5 out of those 6 worked. So it was an 83% win rate for this week for the London session, but an average of about 55, 56, which should show you guys that you don't necessarily need to have a high win rate every week. It's going to fluctuate based on the market conditions, but a lot of people think that, oh, I've got to achieve 60 or 70 every week to be profitable. It's not the case. So yeah, these type of videos, I'm going to make more of them. You can see how I trade macros, inversions, low resistance, dealing ranges, fair value gaps. It's the basic core principles. I'm not using suspension blocks. I'm not using the newest model that comes out that ICT posts about. If you want to do it, do it. But I don't need it. And I do pride myself on that, and you should too. If you're able to use these simple concepts, that's how it should be, in my opinion, because a lot of people get caught up in the whirlwind, or just the whirlwind of having to have something more, having to have something more. You don't need to add anything more. You have enough. If you know about fair value gaps, ranges, like we discussed here, you have enough, and many people are using these concepts, not only myself but other people, profitably to trade the market. With that being said, guys, I had a bit of week off, after that boot camp. If you have any comments, leave them down below. I'm going to do these recaps once a week, probably on a Friday, on the weekend, or on the next week. Today it's Monday here in Australia. And I want you to keep jabbing, keep pushing at it. And just remember, you do have enough, but you've got to stick at the process. I'm going to make some more educational videos later on. And if you haven't yet joined the free Discord, I've got a free A+ checklist in there. That's how I like to siphon out these trades. With that being said, guys, let's start the week strong. Stick to your rules, follow the process, and you will see success. All the best, guys. Peace out. We'll talk very soon.